In my opinion, yes. Many companies in the past couple of years have looked at various scenarios, including pandemics, within the frame of the internal model and ORSA process, which is your own risk and solvency assessment. However, it's not sufficient to look at the impact on your liabilities, and I think many companies have also thought about the impact a pandemic scenario would have on the asset side. If there's one weakness, I would say this is maybe the role of risk insurance as a corporate citizen, keeping in mind that if such a scenario happens, you would also want to react to the community outside of your operation offices. AMR stands for Antimicrobial Resistance, which means that any kind of pathogen would become not more responding to drugs we use to fight them. But the phenomenon has picked up speed and been fueled by the fact that the antibiotics used by humans is creating an evolutionary arms race whereby those bacteria or those pathogens are selected that would be resistant and kind of eliminating the susceptible ones, only leaving the bad guys out to multiply going on. The impact on society and insurance could be significant. So I think this is a tricky thing to predict, as we'll talk about a really long time horizon, about 10 or 20 years before this trend can be actually quantified. I think there are two sides to it. One side is to ensure that you're keeping abreast of the developments. So make use of scientific literature that's produced, meta-analysis, get external sources to add to what your internal knowledge is. If you have a research and development department, if you have internal medical doctors, make sure that they have a good communication up to board level so that anything that might be changing the future course is picked up early by the company and by the management as well. The other track to take is more an actuarial track, I would say, whereby you, based on the input you get from the medical community, set up a couple of parameters. What do you think a future trajectory could be, and then try actually to calculate the impact that this could have on your portfolio. If you're asking for my personal opinion, I think today it's too early to really think that we need to deviate from current best estimates. We're talking about emerging risk, which has a trend that could go anyway, and it's really going over a long-term period. So nowadays, I don't think we really need to adjust the models in the sense of saying this is something that we need to factor in price in. However, what we need to do is get an idea about the potential orders of magnitudes. It's quite useful that you get a better understanding of your future cash flows and how sensitive they would be to changes in mortality, and most companies would have that anyway. So you can repurpose scenarios in mortality trend and link them to AMR scenarios, for instance.